So here we have the framework that I've put together to help you to put these ideas into order. Okay, what does it mean, these 4 ideas? All right, let's get our pointer over here now. So the whole point of knowledge transfer costs is that it's a driver to decentralize. It's a driver. We want to decentralize, so we want to deal with knowledge transfer costs through that decentralization. It causes, you want to decentralize because you've got information overload, you've got information coming out everywhere, right? So you want to delegate, you want to give other people authority to make decisions, because you don't have time to make all of the decisions every day. You're very, very busy. You've got phone off the hook, all right, you've got computer, you've got documentations, you've got meetings, you've got a lot going on. You don't have time to do everything yourself, so you would delegate to other people. That reason to delegate is to reduce your knowledge transfer costs. Okay, that is the time lost in making an accurate decision. Number 2, information overload. All right, you cannot do it yourself. All right, they're the 2 big knowledge transfer costs, and this gets larger and larger and larger. Knowledge transfer costs go up when the size of the organization goes up, when there's greater competition, so you have to respond faster. Okay, so size, right, increases information overload. Competition forces you to respond faster. Okay, and environmental uncertainty, which may be associated with the competition, but also this can come about because of changing government regulations and things like that. So you need to respond quickly to new government regulations, and we know in China that there's a lot of regulations that are talked about on Friday, Saturday and Sunday, ready for Monday, and they just happen so quickly you just don't know, so you need to be up to date with that. These are all reasons why you might decentralize, because size, competition, the environment can all increase knowledge transfer costs. So how could you reduce the knowledge transfer costs? Is there some way that you can still centralize, keep centralized, not decentralized, and deal with these increasing knowledge transfer costs? Well, you can automate, or you can aggregate knowledge. Okay, so like using accounting to try and capture various KPIs. All right, that's a way of aggregating knowledge. And technology, by using CCTV, all right, RFID, barcoding. Companies all use these 3 things. So technology helps in automation, of course, so it's not completely independent. But here we have are basically the factors that cause knowledge transfer costs to increase. And here we have some of the moderating factors that may help you not to have to decentralize as much. Okay, but you still will need to decentralize to some extent. And so here we go over to our next point. We need to decentralize. We're getting larger and larger and larger. We've got 100 people, we've got 200 people, we've got 300 people. We need to decentralize. So suddenly we've got to create responsibility centers, marketing, sales, product development, manufacturing, production, engineering, all sorts. Or if we go multi-country, then we've got subsidiaries that may be a responsibility center. They may be a branch office in China. There may be a sales office in Hong Kong. There may be a sourcing office in Shanghai. So there are different divisions. They could be in different geographical areas. So we want to look at responsibility centers. They could be activity-based, strategy-based, or accounting-based: cost center, revenue center, profit center, investment center. All right, now we've got responsibility centers, so now we need to have some transfer pricing. Why? Because the act of using accounting as a pricing mechanism between divisions enables you to keep those divisions decentralized, and you allow them to create a little quasi-market within the organization. That's what transfer pricing is about, using a pricing mechanism to help record the exchange of economic benefits and value transfer between two or more different divisions. The big question is, to what extent do you allow transfer pricing to be decentralized as well? In other words, you allow the divisions to determine the transfer prices. Do you have a free market, or do you make it really centralized? Okay, so you can have a decentralized organization, but you can centralize the transfer pricing. Okay, so don't mix up the centralization of transfer pricing with the centralization of the decision authority of the various divisions. Okay, you decentralize decision authority, you can still have centralized control over the transfer pricing. Next, we have measurement. So if we're going to start to have responsibility centers that are a cost center, a revenue center, a profit center, investment center, then we need to have some measures. So we want to have return on investment, or residual income, or EVA, that's economic value added. These are all different ways that we can use financial measures to track and hold accountable different responsibility centers that have been set up under a decentralized environment. So once we have some measurement, then we need some rewards. So first of all, we have given responsibility, number one. Number two, we want to measure. We want to measure your accountability for that responsibility. And number three, we want to give incentives for you to hit those measures, to hit those KPIs out of the field. All right, we want you to do that as a manager. I've delegated to you, here are your KPIs, so I need to measure those KPIs. And by the way, if you hit those KPIs, you're going to get a big bonus, and that's the rewards. So see that 1, 2, 3, guess what? That is the three-legged stool. Remember the car with the three wheels, the Peugeot? You got to keep these three things in balance. So now basically I have covered a lot of the issues for those 4 areas. What were those 4 ideas? Number one, knowledge transfer costs, and that's what we said over here. Knowledge transfer costs increase with size, competition, environmental uncertainty. But you can moderate those knowledge transfer costs with automation, with aggregating knowledge, or using technology. At the end of the day, you're going to have to decentralize to some extent as you get larger, as you face an increasingly competitive market. So how do you organize a larger organization? Do you have responsibility centers, a profit center, a cost center, an investment center, a revenue center? Now, once you have these responsibilities, managers in charge of these divisions, now you need to make them accountable for certain KPIs. So you will measure various KPIs, like hitting the sales, like maintaining a certain cost budget, okay? Maintaining a certain sales market share or a certain growth goal that you have set for the division. All right, that's measurement. And then you're going to have rewards. You've got the incentives. So those 3 things are your 3 legs of the stool, or the 3 wheels of the car. Knowledge transfer costs, you got your 3 wheels of the car, right? Now that's the third idea. Now what about the second idea? Ken Lay, remember agency costs? As knowledge transfer costs go down because you are decentralizing, what was that thing I said goes up? Agency costs. Remember what I said earlier? As you decentralize, the whole reason of decentralization is to reduce knowledge transfer costs. That's the cost of not getting information on time because you are centralized everything. Okay, knowledge transfer costs can go down if you start to decentralize. All right, and also the other cost of knowledge transfer costs is the information overload, the fact that you don't have time to make all these decisions. Now, of course, both of these things result in inaccurate decisions. you make poor decisions because of information overload or because you're getting information too late. Knowledge transfer costs go down, and guess what, Kenley? Agency costs go up. So what are you going to do? You use the three-legged stool to manage agency costs. You see? So now agency costs go up, but now we invest in controls. We invest in having a measurement. We want to measure. We want to measure your responsibility. We want to measure your accountability. We want to measure different KPIs. And so now that I'm measuring it, it's creating visibility over your actions as a manager. So you better behave yourself and not cause me any higher agency costs than what I can withstand. Yes. And so finally, I want to attach to that measurement some rewards. So if you follow the rules, Mr. Manager, you do the right thing, you hit the KPIs, I'm going to give you a big bucket load of money. Yes. So this is the whole balancing act that we're going through here. Now, in the process, that fourth idea is this idea of transfer pricing. Now we've got knowledge transfer costs. We have delegated, but now we've got a three-legged stool to manage that delegation. So therefore, we can have lower agency costs. We want lower knowledge transfer costs. We want lower agency costs. Now, of course, control costs have gone up. All right, because we've got the three-legged stool in place. We're measuring more. We're giving bonuses for hitting those KPIs. Now, part of these control costs is transfer pricing. And transfer pricing enables us to help manage interactions of exchange of value between two or more decentralized divisions. And so you can decide, do you want to focus your transfer pricing on achieving co-congruence or improving managerial effort or enabling subunit performance evaluation or enabling subunit authority or enabling subunit autonomy? Now, all of these objectives are a juggling act, and it's nearly impossible to achieve all of those objectives with one type of transfer price. And we can go into a little bit more detail about setting the transfer price. There is the discretionary transfer pricing, where the head office says this is your transfer price. And part of the reason why they may say that is because our tax planning strategy internationally dictates that we must use this transfer price, and we know that that is becoming increasingly a dominant form of transfer pricing around the world, where the head office dictates the transfer pricing. But assuming that that objective is put on the side, what other objectives can you achieve with transfer pricing? Well, you allow divisions to negotiate over a transfer price, or you allow the market to set the transfer price, you see. So there are different ways of seeing the transfer price, but it's within this context of a decentralized environment where we have these managers that will cause agency costs if you do not measure their performance, you do not have KPIs, and if you do not have bonuses associated with those measures. So those three-legged stool: delegation, measurement, and yes, you got it, rewarding the incentives. So what I've taken you through in this section is like an introduction to decentralization and transfer pricing. We can get into a little bit more detail about the exact detail of decentralization and transfer pricing in the chapter. But for now, you've got 4 ideas: knowledge transfer costs, agency costs, the balance of delegation, measurement, and incentives, and finally, just balancing the multiple objectives of using transfer pricing in this decentralized environment. Thank you, and I'll catch you in the next session. Bye for now.